So will Eric, so that we go back and join as participants.
Do you have to?
Aeko, you're muted.
Do you have to, Ruth? Can't you just continue? Yeah.
Do we have to do anything as the panelists?
No.
Okay.
Because Joyce is going to stay on as the host, so I'll go off. I need to have the participant perspective so that in case of anything, I'll be able to coordinate with Joyce.
All right.
Eric, I can see we are live on custom live streaming. Are we live now? I'm seeing
no, I haven't started the webinar yet, but we're 2 minutes in.
Oh, okay.
I still have practice session plastered on my end. Will that be the case?
Should I go live?
Okay.
No, hold on, Joyce, until I think Mr. Wim comes in, then we can go live, right? Aeko, what do you think?
Okay. Yeah, Andrew, you just give us some guidance. Shall we start without Wim, or shall we start? Or shall we give Wim a few more minutes? Wim is here.
He should be connecting.
Okay.
Joyce, can I exit now?
Just hold on.
Wim's microphone is not on yet, I think.
Joyce, you have the host rights back, right?
Yes.
Okay, good.
I think he's dropped again, or?
Yeah, I think so.
Perhaps it might be prudent we just start and then he can join in a few minutes.
People in.
Yeah.
Okay, yeah, right.
Yeah.
All right, we're going live now.
All right, excellent, thanks.
Joyce, I'm leaving.
All right.
Hello. Hello. Am I on the right link?
Hi, Wim. Yes.
Oh, sorry. I was connected to the wrong link. I saw you, but I couldn't talk. Sorry about that. My apologies.
No worries. You're very welcome.
No, but we are late. Welcome. Sorry about that. Sorry.
That's all right. Yeah. And so since you've joined us, I'm going to just start off with welcoming everyone that has joined this webinar. This is a webinar that is sponsored by the CFA Society East Africa. The CFA Society of East Africa is a society of investment professionals that essentially encompasses investment professionals practicing in the investment industry in Uganda, in Kenya, in Rwanda, Tanzania, Ethiopia, basically the Eastern African region. A number of them are tuned in, and we have today a member of the board of the CFA Society East Africa, Mariam. She will say a few words. We also have George from BDO East Africa, but also we have members of the MTN Senior Executive. There's Wim, who you've seen very briefly there. He's going to stay with us answering a couple of questions, as well as Andrew, the CFO, who's also going to answer a couple of questions. So perhaps at this point, let me invite Mariam, member of the board of the CFA Society of East Africa, to say one or two words before we kick off. Mariam.
Thanks, Aeko. Greetings to everybody that's tuned in for this session today, especially Wim and Andrew that have allowed to join the CFA Society. So my name is Mariam Nansubuga. Among other things, I sit on the board of CFA Society of East Africa. CFA, maybe back to basics for those that may not know, the acronym CFA stands for Chartered Financial Analyst. And the Chartered Financial Analyst is a professional qualification, the most globally recognized investment management qualification. And it's administered by CFA Institute that's headquartered in Virginia. However, CFA Institute reaches out and operates across the globe through member societies like ourselves, CFA Society East Africa. And the mission is really for us to promote the highest ethical standards amongst financial market stakeholders, as well as promote financial market development for us, especially within the East African region. And lastly, to enhance financial knowledge amongst the investing public. And we do all this for the ultimate benefit of society. It is a voluntary association that brings together investment practitioners in the region.
Mariam, I think Mariam's connection has skipped a little bit. Mariam, can you still hear us? All right, I think Mariam's connection has skipped a little bit, unfortunately. Oh, Mariam, there you are. Can you still hear us?
Yes, did I drop off?
You dropped off at the point of introducing the CFA Society. You said it has affiliations worldwide.
Yes, so CFA Institute, the administrator of the CFA program, operates across the globe through its member societies. For example, the CFA Society of East Africa. And those member societies bring together members within those particular regions. So across the East African region, the countries that Aeko mentioned, we have slightly less than 200 members, most of whom are charter holders. They have completed the CFA exam. And specifically in Uganda, we have 42 charter holders, 5 of whom are female. As mentioned, the third mission of the society is enhance awareness of investment knowledge. And so the CFA Society has organized a series of IPO webinars, 4 in total. This being the second. We held the first one on Monday. We have 2 planned for next week. And the objective is really, to increase awareness and understanding around what initial public offerings are, demystify some of the myths, that we have seen in the public corridors, or as well as clarify certain facts. We are neutral, I must emphasize, as we do not necessarily make any recommendations, but enhancing and sensitizing the markets is one of our missions. Thanks, Aeko. Back to you.
Thank you, Mariam, for making that introduction. Again, just to repeat what Mariam said there, the objective for organizing this series of webinars and Twitter spaces is to increase the public's understanding of the IPO process in order for them to make informed decisions. And we are in this process also spotlighting the MTN, because it is the current entity that's going through an IPO process, in order to inform the public. Generally, what we have to emphasize is the CFO Society is not promoting the MTN IPO. I think the MTN executives will speak to the MTN IPO, but we will generally cover principles that are important and are relevant to the MTN IPO. So to kick off matters here, we would like to start with just definitions out of the way. So the structure is going to be, we're going to define a concept that is important in understanding this this IPO process, and then throw it back to the MTN executives to sort of, from their perspective, how does this actually get translated and how are they covering their bases in terms of the public's understanding? So what I'm going to start with is definition, an IPO. What is an IPO? And my colleague, George, is going to help us define what an IPO is very, very quickly. And then we will go to the MTN team to understand which kind of IPO they are currently undertaking. George.
Thank you very much, everyone. Just like as Aeko said, I'm Jim Jota Otim. I work for BDO East Africa as a corporate finance consultant. So an IPO is, in full, is initial public offer. It takes place when a company decides to go, a private company decides to go public. And there are various ways for them to do that. It could be a listing on a stock exchange through inviting the public to subscribe shares on that particular company. And the funds that are raised through that process could be used or directed in 2 ways. One is that the money could go into meeting the expansion plans of the business, i.e. it's invested in the various projects that the business is looking at. Then the other is when the existing shareholders of the private entity selling part of their ownership in the company to the public, and that's the way it happens. If you're looking at the benefits it brings the company, one would be brand visibility. 2, you're looking at the possibility of the cost of capital for the company being reduced. In essence, the fact that the company's financial statements and ideally the governance would be scrutinized helps ensure that investors and lenders are eventually comfortable with the operations of the business and can offer the business attractive rates in relation to them raising capital in future. So I think, and then just to mention a few drawbacks, I think one would be the time it takes you'd have to invest so much time in ensuring that it's successful. So you'd find that the management team of a particular company is quite involved and engaged in trying to convince investors, specifically retail investors, to participate in such an offering. Then two, it would be the cost that goes into one, the initial costs of hiring advisors, reporting accountants, and the capital markets, as well as the securities exchange. But then there are also onward listing costs that you'd incur at the exchange as well. So I think that's it. Over to you, Aeko.
Yeah, so I think what I picked out, the two things, the two motivations, either existing investors, existing shareholders selling out some of their shareholding, but also fundamentally that the company is raising capital. So I will turn it over to MTN. I think I will want to ask Wim here. So given that these are the two motivations, either existing shareholders selling out or the company raising capital, which one is it for MTN in particular? What are the motivations and what's the business case here, whichever the motivation is? Wim.
Yep. Thanks for that. That's a very, very good question to start with. So let me take you back to the two reasons why we are doing the IPO in the first place, and then I'll come back to you on which of the two IPO structures is it that we have chosen. So in last year, 2020, we finally renewed our operating license with the UCC, and there were three conditions in that license. Grosso modo, three big conditions that we needed to fulfill. We needed to pay $100 million license fee for 12 years operation. That was done. We also committed to expand the network to covering 90% of the land mass of Uganda. That is a work in progress. We still have another 4 years to fulfill that obligation. And then the third obligation was to list 20% of the company on the USE. That is coming from the National Broadband Policy. So in 2018, September 2018, the National Broadband Policy was adopted by government, and there was a strong desire in that broadband policy to get localization of telecom companies. At the same time, there also was a desire to do listing. So what we are doing is a localization through listing. So the license obligation talks about listing obligation, but the spirit of the obligation is not just to do listing. It is also to get a much wider Ugandan shareholder base through the listing process. Okay, and how we want to achieve that, I will come back to that maybe in some of the later discussions that we will have. So first of all, it's an obligation to list. Okay, then secondly, yes, it's an obligation, but we also looked at it as an opportunity because currently we have two shareholders. There is Mr. Mbire, who owns 4%, and there is MTN International, who owns 96%. Okay, so it's a big company. We are the biggest taxpayer. We employ a lot of people. So I think we are a big company, it's fair to say, but we only have two shareholders. Having two shareholders after 23 years of existence and presence in a country isn't good. Okay, so let's be honest. Just having two shareholders is not good enough. Okay, so there's also a desire from MTN International at the group level to make sure that we widen our shareholder base in all the countries that we're operating in. Because look just across the border or anywhere else, you will see that listed companies with a wide, not just a few shareholders, but with a wide shareholder base are much stronger and perform better ultimately in the long term, than a company, MTN Uganda, very big tree, but with only two roots, only two shareholders. Okay, now I'll answer your question. So the route that we have chosen is that the majority shareholder, MTN International, who owns 96% of the business, with 4% for Mr. Mbire, the MTN International is selling 20% of its shares, okay, to the general public through this IPO. So it is the majority shareholder who's selling 20% of its shares, and so the proceeds of that sale go to the selling shareholder. Okay. Now, why have we chosen that? I think Andrew can, as a finance expert, he can go a little bit more into the detail. But basically, the bottom line is that MTN Uganda as a company has such a strong balance sheet, the debt levels are relatively low, that we are going to, embark on a very ambitious rollout plan to fulfill that 90% coverage obligation without us actually needing the proceeds of that IPO in the company. Andrew, can you maybe for the experts, the financial experts, take us through a little bit more on that statement around the balance sheet and the debt?
Okay, yeah, thanks, Wim. So currently, if you look at, last year around Feb, we secured $100 million worth of debt for funding. That's CapEx, working capital, and obviously to pay for the license fee. Okay, at the same time, as we mentioned, if you look over the years and now, we've invested over 1 trillion over the last 4 years and have committed to invest another 1 trillion in the next 3 years, of course, because we're going to accelerate, especially in meeting our license obligations. We don't have to wait until the full 4 years.
Andrew, just a quick one. So when you say 1 trillion, is that $1 trillion, 1 trillion UGX, or $100 million, 100 million UGX? That's important.
Yeah, that's very important. Yeah, 1 trillion Uganda shillings is what we are going to invest over the next 3 years. And if you look at it, the last 4 years we've invested, the same amount, 1 trillion. We are only accelerating this year. So, of course, like I mentioned, we did get debt, to finance CapEx. The debt will be paid over, the next 5 years. And, so as we mentioned, as an organization, as a company, our balance sheet is very strong. Now, you have 96% of your shareholders selling. So we don't need that money, to invest in CapEx. Honestly, financially, it doesn't even make, sense for an operation that is 23 years old, very mature, when you can finance it through debt. Okay, so we don't need the money. So the selling shareholder, like anyone, if you'd invested, I would say, in another country, let us say you bought a nice piece of property 10, 20 years ago and you're selling. Of course, the proceeds will go to the selling party. So where we are today, and financially, you even get more pressure. Why aren't you jet? Why don't you borrow more? It makes more sense to structure because equity is more expensive. When you have a good blend of both, it's much cheaper.
All right, thank you so much, Andrew. Thank you, Wim. So a critical thing, of course, for the average Ugandan potential investor is to understand the nature of this investment if they are to buy a share of MTN. So traditionally, and this might cover maybe nearly 98% or 99% of the assets. There are two major types of assets. There's the debt, the assets structured in terms of debt, either a fixed deposit, a treasury bill, treasury bond, or a corporate bond, etc., structured in terms of debt. And typically the way you benefit from it is slightly different from an asset structured in terms of equity. Of course, an equity instrument or an equity asset, it's the way you benefit from an equity asset is very, very different from the way you benefit from a debt asset. So the benefits for equity ownership, whether it's equity ownership of a piece of land or equity ownership of a small company or equity ownership of a fractional share of a large company, has typically two components. One is capital appreciation over time. And then 2 is dividends that are paid or cash flows that come from that asset, if it is a share of a company, or rent, if it is rental properties, etc. So they have these 2 aspects. So we want to very firmly place a share of MTN. And again, this is targeted towards explaining the structure of this asset to the average investor. What aspects or what attributes are important, or where does it lie? Is it a debt instrument asset, or does it have equity-like features? And then the second question is, what are the drivers of returns for that specific MTN asset? Andrew, Wim, either of you can take on this.
Andrew, you want to go first? Or... Okay, I can take it. So of course, I mean, buying shares, I mean, you know, you've explained it eloquently, very correct. How do you make money? Capital gain. The share price goes up, can go down. You sell at a profit, don't sell at a loss. Those things, of course, are very much driven by offer and demand. So we as management, we cannot make any reasonable, you know, any reasonable forward-looking statement about the value of our share. Okay, we know at what price we are selling it, 200 shilling. Okay, it will be listed on the 6th of December at 200 shilling. Now, will that price go up? Will it go down? What will happen in 1 year or 2 years or whatever? I mean, the price of the share is very much driven by market forces. Okay, those market forces, of course, they take into account the performance of the company, but there are also so many other forces at play that are far beyond the control of management. So I cannot make, and I will not make, and it would be very silly if I would make any statement around a possible capital gain of the value of the share on the USC. Okay, I think you guys are much better placed even to caution me and say never make such a statement, because it's suicide. That a management cannot speculate around the value of its share. Okay, we know at what price we are selling it. I think Andrew can take us through on the logic, the evaluation, the methodologies, on, you know, how you come to a fair value. Of course, what I can make comment about is the dividends. It's like, as you say, the rent of the house. Okay, the dividends, the value of the house, we know at what we are selling it. What will it be worth in 2, 3, 5 years from now? I have no idea, but at least I can give you some insight in the dividends or the rentals that the house will produce. Okay, and for that, we need to look also a bit at the historical performance and why we believe that historical performance is going to give us a flavor of what the future looks like. So when we talk about dividends for 2021, okay, per share, up till now, October, okay, we have paid about 10 shilling per share. That is what we've paid already for this year. There will be a final dividend in February when we close the books for 2021. How big or how small that final dividend will be, again, I cannot, you know, put a figure onto it, but we will close the books in January, February, the audit, and then we will declare a final dividend for 2021. We have already paid 10 shilling a share so far to the existing shareholders. I want to be very clear with that. There is no smoke mirrors around that. It is very clearly in the prospectus. We have already paid a significant dividend for 2021. Now, why did we do that? Because in 2020, we actually held back on an important dividend because of COVID, lockdown, insecurity. You know, as good house fathers, as managing the business, when you look at the graph, the 2020 dividend was almost the same as the 2019 dividend. Okay, so it wasn't logic to say, you know, we've been growing dividends 20-25% every year. We grow. But in 2020, we held back because 2020 was a very tricky year. okay? We had to be cautious. We didn't know corona, vaccine, lockdown, you know. So as a good house father managing your business, we said, let us be, you know, a bit conservative and not pay too much money to the shareholders. Now in 2021, we feel much more comfortable about how the future is looking at. And that's why basically we paid a little bit more dividend already in 2021 than maybe some of the experts would be expecting. But a part of it is actually a catch up of something that we didn't pay in 2020 because of being a bit more cautious. Now, going forward, we have a track record of dividends and profits growing 20-25% year after year. When you look at it historically, yes, there has been a year in 2016 when there was or 2015, 2016 when there was an exceptional dividend. But Andrew can take you through, you know, sometimes you accumulate so much reserves that, you know, also, you know, take an extra loan. We had almost no debt. So we took a loan in 2015 and we paid some extra dividend to the shareholders. So that's why sometimes you see an up and a down. But over the long-term period, the last 4 years at least, we have a consistent track record of our dividends growing by 20-25% year after year. Why do we believe that that is going to continue? Is because we are still in a very dynamic growth business. Telecom is growing, has been growing, will continue to grow. And despite Corona, lockdown, elections, 21 and 2020 have been very difficult years for the business. I'm not going to complain because there are many other businesses that suffered much more than the telco and the mobile money business. But despite all of that, we're still growing 10% year after year. Bottom line, 20-25% year after year. There is still so much growth in Uganda. The population growth, the economic growth, mobile internet, mobile money, there is still years and years of growth ahead of us because we just look across the border in Kenya and we see that they are 2-3 years ahead of us. Okay, in terms of smartphone penetration, in terms of products and services, of mobile money, we already know what the future in Uganda is going to look like by just going to Nairobi and just see what is happening there when it comes to data and mobile money. We get a very good flavor. Even on fiber, we know there's so much opportunity. So we strongly believe that there is so much growth in our business still ahead of us. That's why we believe that the top line and definitely also the bottom line is going to continue to grow. And then the bottom line growing means the dividends will also continue to grow. And are we going to pay, you know, 12, 15, 20, I don't know, whatever shilling per share? We believe that what we have paid already this year, plus what will follow for the final dividend, that figure will continue to grow in future. Andrew, you want to add something maybe or on the evaluation?
Okay. Actually, I want to bring, if I can just interject, I'm going to ask Andrew if after this question about the valuation and how we arrived at 200. I think you'll just prepare for that on the sidelines. But what I wanted to focus on is just to follow on your thoughts. So we stated that typically a person benefits from owning a share in two ways: a dividend, which you have talked extensively about, but you've also talked about growth. So in these parts, I think a lot of the time, the focus is probably more important when you talk about growth, because a dividend is typically a certain fraction of the share price, whether you're taking trailing or forward earnings. It's a certain fraction of the share price. But that fraction is typically, and you look at many companies here, is typically much smaller or much lower than, for example, the risk-free rate, which is roughly about 10% per annum. So you can get that from the risk-free rate. So in making the decision, an investment decision, we are focusing on growth. By how much more can MTN convert the big opportunity, the population growth, the voice, the data, the MTN mobile money, by how much more can it actually grow its business for it to convert that opportunity, especially given the fact that the franchise can only, and again, this is part of the question, the franchise is focused within the jurisdiction of Uganda. For example, you can't offer services in MTN Uganda can't offer services in South Sudan, or is that possible? Especially, and I will ask again, maybe you note down, for the mobile money business, can it offer services? Because if you compare it to Kenya, Safaricom, for example, Safaricom has M-Pesa, but M-Pesa offers services in more countries than just Kenya. Those two are not necessarily comparable. So what are those growth drivers and how are they likely to evolve? And those are the things perhaps that are in control of management, so to speak, the things that might not be in control of management, as you rightly said.
No, thanks for that. Okay, Andrew, go ahead.
No, so we can talk about the basic growth drivers. So we need to understand, okay, so everyone talks about voice. So for MTN Uganda today, voice contributes over 50%. And there's a lot of talk, voice is declining, it's, okay, yes, it's declining. In absolute, it's still growing. Declining in a sense, your percentage is lower. Today, if you look at our quarterly results for group, voice grew by about 6% or 7%. And why does this happen, maybe to say in Uganda or Sub-Saharan Africa? Let's go back. In Uganda, mobile penetration is just 61%, and that involves subscribers with 2 phones. If you compare our peers, I think around about 77, Zambia, 91, Kenya, you're almost 110. So now look at the phone, the mix of phones in Uganda. Over 50% of the phones are still feature phones. So meaning they're not smart, they don't have data. So if you go in any new coverage area or any other place you go to, your first customers will still launch onto voice and mobile money. So that's why, voice still has some little room to grow. Though the key growth areas for MTN Uganda in the future, now and in the future, will be mainly data and mobile money. Now, if you start with data, in Uganda, penetration is just 26%. If you look at MTN Uganda, we have 15 million customers and only 5 are using data. It's a no-brainer, and we have demonstrated it even till today, that once a customer moves from a feature phone to a smartphone, your ARPU pretty much doubles. You almost, for some customers, want to offer them a free phone, okay? So when you look at data, there's great opportunity in Uganda, and what we're working on now, the coverage, and that's why we mentioned the investment is very key. If you're going to survive for data to enjoy the quality, you need to keep investing, because what we know, services are all going to move to devices. You'll be watching your TV, your radio, most of your entertainment. I can bet you people will be watching World Cup either through Facebook or what, on phone or devices. We need to be ready, so we'll keep investing. So which means coverage becomes key. The next thing is devices. So we have our own promotions where, one is able to pay in installment for 6 months. We've also partnered with M-Kopa. That's key because it's one thing having a wonderful network, all 4G, but 50% of your base don't have the devices. So they will not get the experience. You will not be able to optimize actually the efficiency because it's actually cheaper when most of your customers move to 3G and 4G. So data has that opportunity, and that's what we continue to do to scale it up. Then you go to, for data, content is going to become key, because at the end of the day, content has to be relative to the context, the Ugandan context, and you'll have to go deeper within different regions, because what people are going to be buying is the service. It's not data. If I want to watch a movie, I'm paying for a movie. If I want to watch World Cup or radio, that's what I'm really paying for. So this issue, can I buy a bundle to watch this, will die. It's what service are you offering? So it's important that the pipe is clear. Now, when you move to mobile money, it's a great potential for Uganda. If you see where our growth is, as we've mentioned, we've been concentrating a lot, or the business today is set up more in a way where you have your traditional Momo, cash in, cash out. The opportunity lies in scaling our payment services, the Momo Pay. And here we are saying, who is the customer behind our customer? We all know today in Uganda, you might not know, but you send someone money, on mobile money, and they'll say, oh, please, can you add cash out fee? And now I always ask why. What is it that you want to cash out? When you're in Nairobi, from road tolls everywhere, M-Pesa. In Uganda, we're probably about 2 years behind. So we need to build that ecosystem, the agents, the merchants, to ensure that everywhere you go, you are able to pay for mobile money. Whether you pay a farmer, he needs to buy his vegetables or buy his waraji, he should be able to use mobile money. Same thing, for mobile money, and has what you call, Momo Cash. I think you have it. Is it Fuliza Namp? You have similar products in Nairobi for Safaricom. So Momo Cash has an interesting story. Today you have many Ugandans, not many, some Ugandans who can lend a simple border guy who doesn't have enough money to buy a liter of fuel to get, on his day job or run his errands. Momo Cash, you can lend him, he buys, his liter, is able to trade, end of the day, pay back, keep his margin and pay up his loan. So there's massive opportunity for Momo Cash to be also scaled up. So, and then of course we have the international remittance, cross-border. So those three, which are pretty much what you call fintech or advanced services, is what is going to scale up. So today, Uganda, we have about 9 million mobile money subscribers who are 15 and are still growing. Because remember the demographics of our population, where 50% are youth and are growing. And I think I was reading a World Bank report where they mentioned, I think Uganda 2030 should have about 60. So you have a 10 to 15 potential customers that will come in. And when you look at your penetration levels and the opportunity, this is where the main growth drivers are going to be for telecom. And I would ask someone, you tell me when you'll stop using voice, data, or mobile money. Just the other day, you had, Facebook, Instagram, and is it WhatsApp down for a while? It was like, everyone was wondering what the hell is going on, just 5 hours. So, like today, I tell people, fiber at home today. When you're using mobile broadband, today you have fiber. Just watch your kids. Everyone is now moving away from TV. They're all streaming. So the world and everyone is moving, and no one can stop that wave. So it's how do you prepare? Because it's with us. We see it. And the pandemic woke everyone up. Because today, look at what we're having this meeting the way we are today. I don't know how many we've had like this, and this could not have been possible before without the pandemic. And it's not going to stop. It has, to be honest, accelerated the digital evolution that we all knew, but the pandemic has shown that silver lining. So mobile money and data are going to be key. We cannot discount voice so soon, at least for Uganda. And those voice revenues are great margins, great cash flow. Ask how many guys the pricing and margin for data and mobile money. It's different because remember, data, massive investment. Mobile money, how much capex are you investing? Not that much higher returns. Now, back to two things regarding, I'll speak about dividend. For Uganda, and this I think we need to make clear, in our forecast, in the prospectus, we have once-off items. So in our forecast, when one looks at it plainly, you have 325 billion, if my memory is good. But it has a once-off transition license fee of 50 billion. Okay, and also has an 11 billion once-off termination fee, which is about 60. So your real profit after tax is, like about 385 over 380. Which brings me to, if someone wanted to do even valuation on an EBITDA multiple, or if you're using per earning ratio. So if you're using a per earning ratio to work out what it could be, I've seen a lot of media, analysis, but many forget to add back because you are trying to value a company with once-off. So if you're to use a per earning ratio with once-off adjustments to project in the future, obviously that will affect your valuation. Now, same thing for dividend. So what is we've paid so far 230 billion. So depending which PAT you're looking at, if you look at the one with the once-off, you're coming up with about over 70, 73 payout ratio. When you get real PAT without once-off, you have about 63. Okay, so as we mentioned, we pay thrice a year. We pay, interim around August and then in the last quarter, and then the final one. So, and we are comfortable and with a clear conscience, because if we end up listing before end of the year with our potential shareholders, they will be joining us, I would say, for the last 2-3 weeks of the year, which will still pay an extra dividend, which we cannot, give an amount now until, the accounts are audited and we determine what the final amount will be. So my last, comment about valuation, and I need to be cautious here, because we as MTN management are conflicted, in telling you that 200 is fair or this or that. But I'll just tell you, for me, honestly, it's quite simple. What are the EBITDA multiples of telecom today? I mean, anyone who's doing back of the envelope valuation, okay? What is the EBITDA multiple of Safaricom today? What is the average EBITDA multiple of a telco today? What is our EBITDA multiple based on a 200 shilling price? If someone does the numbers, then, I'm sorry, I might sound vague. I'm trying to avoid being conflicted and speaking about the valuation. And that's why we hire our transaction advisors to keep us honest. But for me, it's very simple. Look at 1 billion, even if you don't want to adjust for the once off, the 11 and just leave it the way it is, 1 billion or 48. Just do what the average basic EBITDA multiple is in the industry. And you'll have your answer on, okay, you get, is it times 5, 6, 4, whatever you get? What is our valuation? Is it a premium or not? I mean, then anyone can make up their own mind on whether there is value or
not. Andrew, thank you very much for the detailed breakdown. I hope the audience appreciates some of that sophisticated math that you've done for us. So I just want to turn it over to the risks now. As you and I know, that every investment really is essentially taking savings that are safe in your pocket, but putting them to work, and putting them to work in this case, for example, putting them into an MTN share. So I'm going to ask Mariam to just highlight for us generally, and then we'll come back to MTN, but generally, Mariam, an investment in an equity, what are the risks that an investor typically faces? And then we'll come down to looking at MTN specific risks later with the MTN team. Mariam.
Thanks, Aeko. And in fact, the discussion that has happened up till now has spoken to some of those risks. But for starters, a key risk is market risk. And market risk here very simply being MTN is now at the stock exchange and the price can either increase or decrease. So we're buying today at 200 shillings per share. 1.5 years from now, 2 years, 3 years, if you invested 100 million, at 200 shillings per share, that's about 2 billion, if my mathematics serves me right, and the share price drops to 50 million shillings, you will have in fact made a capital gains loss because the value of your investment will have reduced by that. So stocks, for instance, MTN that is listing now and the others that are listed on stock exchanges experience this market risk, but there's also an upside to it. It's not all gloom that the price could increase. So, perhaps MTN will speak to that in a moment. They kept mentioning because of conflict that they cannot necessarily guide, but that is what it is. And maybe to the audience, looking at the stocks on the exchange now, you can see the trend in pricing thereof. But uniquely so, because we are now investing as shareholders, all other risks attributable to an investment in a business will now affect the new investors that are investing in MTN through equity. And among others, at least maybe about 4, could be credit risk. We've spoken about, financing of the ambitious capital investment plans by MTN in order for them to cover 90%, achieve the 90% coverage. Part of that, if I heard correctly, will be financed through debt. So credit risk, in as far as MTN is unable to repay any debt obligations that it's taken on, implies that it could be liquidated. That's worst case scenario. or otherwise certain parts of the assets may have to be liquidated in order for them to meet that debt. We hope that, MTN will generate sufficient cash flows to be able to repay this debt. Another important risk for MTN, because it has, I think, close to 5 regulators, is regulatory risk. They are bound by certain standards. They need to meet certain minimum standards, failing which there's possibility to not renew their license. I think we saw a bit of that last year, but again, the team can speak to it. But that is something that they can experience. Other common risks, for equity holders, and these apply to businesses generally, could be liquidity risk, where the business is unable. For example, Andrew has spoken well about the dividends to be paid. That a business generates a profit does not necessarily mean that it has cash at the right point in time to be able to pay the dividend. So, these are all risks generally that would affect a business, and that MTN may also face, at any point in time, and therefore any new investors would easily face the same risks. So there's political risk, economic concentration risk, inflation risk, etc. Perhaps for me, the key risks would be around market risk, credit risk, the regulatory risk as well, and maybe Aeko, over to you, but I would invite the team to speak to those as well. Thank you.
Yeah, thank you, Mariam, for defining those risks for us. Yeah, I know, of course, for every investor, and this is typically what we advise: read the prospectus cover to cover, maybe 2 times. Because that's where all the information is. But of course, as you know, sometimes people are not able to go through that document, or even if they go through it, it might be a bit difficult to absorb all that material, or they might not even have maybe the training and experience to understand all of it. So either Wim, and I'll ask Wim specifically for this. So Wim, just quickly, what are your most important 3 risks? I know I went through the prospectus and there's quite a number of them listed there, as you rightly should, but what are the most significant 3 of them? And then 2, what are the sort of mitigants? The reason why I ask this is because the public is interested in this particular entity, and they want to possibly make an investment decision. But there's been so much talk about risks. MTN has sold off its towers. It's what assets is its asset like? What assets does it have? And can it generate revenue? Or the guys might refuse to rent them the towers. There's all sorts of things. So what are the 3 most important risks from your perspective? You don't necessarily have to go through all the 20 that are listed in the prospectus. And then what are the sort of mitigants that we have to take care of them and sort of to assure investors? Wim.
Okay, so what you've mentioned there, some of them for us are not very important risks, like the tower co, fact that our towers are held by or owned by another company. We don't consider that to be really a significant risk. Because of the nature, they can't carry the tower on their back and run away with it. It has to stay. So we have seen in other markets, if the worst comes to the worst, then telco operator can always step into the shoes of a tower co and guarantee business continuity. The telco is so important for the country as a whole that nobody can just decide, let's switch off the tower and that's it. But anyway, let me focus on the 3 most important ones, because that's what you asked, and that's, I think, important for people to understand. From our analysis, the 3 most important risks that we are dealing with on a day-to-day basis, basically, that are on top of our mind, is a regulatory risk, okay? As rightfully mentioned by Mariam, regulatory risk with many regulators. So regulation always is good, but also comes with risks, because regulation can change, standards can change, We are subjected to potential penalties. There can be penalties imposed on us by UCC, by BOU, by CMA soon, by FIA. So when you look at all the regulators that we have, there are quite many, and regulation can change. There are mechanisms that the regulators have to, impose their rules and regulations, and if there would be compliance gaps or misunderstandings in compliance standards, that could lead to penalties, but it could also lead to change in regulation. Now, change in regulation is not necessarily a problem, but it could. Like, for example, SIM registration. We have gone through that in the past. We had to disconnect, 500,000 or 600,000 customers in 2015 or 16 because of non-compliance with new SIM registration standards. Okay. Ultimately, for us, our business, the impact on the top line or the bottom line wasn't really significant because most of those 700,000 were already very low revenue contributing subscribers. But okay, it cannot be excluded that there are other kind of changes in regulation that could have an adverse effect on the performance of the business, like taxation. So regulation, for me, I put it also together with taxation. Mobile money tax is the best example. Okay, the OTT tax, a lot of people will talk about, but the OTT tax didn't hurt the business that much, but the mobile money tax really did. Okay, the mobile money tax hurt our business, and our mobile money business was slowed down, or basically came to a standstill without the real growth for almost a year before we had recovered. So we went down, and then we took almost a year to recover from the impact of the mobile money tax. So regulation and taxation is definitely a risk to our business, that is sure. At the same time, it can also be an ally to the business. Okay, regulation as such isn't a bad thing, because regulation also, protects businesses from irrational behavior. Like, nobody can come to the market today and start a telco operation without a license, meaning they're also subjected to the same regulations that everybody else is subjected to. So it is not necessarily a bad thing, but the history, the past has shown that there are definitely risks involved, in this kind of regulatory environment. The second risk, definitely worth mentioning, is competition. Okay, we are in a competitive environment. On the telco side, of course, there is now a bit less competition in terms of the numbers. A few operators have left the market. Africell has left, Smart has closed. Okay, some of the other operators maybe have not fully migrated to a new license yet, but competition risk is definitely there. Okay, we cannot underestimate the power of competition, both on the telco side and also on the mobile money side. Now that the new NPS Act has been put in place, the BOU is also now issuing separate licenses. So we also are getting now a bit more competition on the mobile money side. It's no longer just the telcos that are doing mobile money, but there are other smaller players that are also entering into that space, including over-the-top fintechs. You have now, just like WhatsApp, as an over-the-top that is not really operating in Uganda, but it is affecting or impacting our business. You also have now fintech operators like Alipay, or have so many of those examples. Apple Pay also, that could potentially be a threat, not just within your jurisdiction, but they actually have now competition from outside of your jurisdiction, which of course is a challenge, because your regulator cannot regulate entities that compete with you outside of your own jurisdiction. That is the big problem, with the OTTs. and with the Facebook and all that, is that they're not necessarily operating within the same jurisdiction. So competition, not just look at it as one big player, the red boys versus the yellow boys and girls, but I mean, it goes far beyond the traditional competition that we would see today. There are also other threats of competition, you know, that can that we don't know yet about, but that can come anytime soon. Okay, and then thirdly, I don't like saying that, but I mean, we are where we are. We know Uganda. We have been around for 23 years, and some of us even more. I mean, there are also risks related, you know, to the stability of the country. What we see in other markets, that I don't think that will happen in Uganda. Very unlikely. But when a country enters into a conflict, internal conflict, companies collapse, whether it is Afghanistan. I mean, we are operating in some very, very dangerous, difficult countries like Afghanistan or Yemen or Syria. Fortunately, you know, we have been blessed and we have been benefiting from a very stable environment in Uganda for the last 23 years. We all know that there are no guarantees that is the same, what is going to continue in the next 23 years. Okay, so those are also risks that we all have to live with and we have to accept when we make an investment. Okay, there are certain things that are beyond the control of the management, of the owners of the company also, that we, you know, you have to measure that risk and make your own decision whether that risk is big enough for you to say this is too risky for me, or whether we feel that that risk is, you know, within reason and that we feel that it's worth taking the risk. I think that is exactly the concept of risk. Are you willing to take the risk or you're not willing to take the risk? So you have to make your own mind and appreciate how big those potential risks could be ultimately in the long term.
Thanks, Wim, for that elaboration. So the next thing that I want us to sort of narrow down to is some investment concepts, especially for investors focused on in these parts as well. And very importantly for institutional investors, but to some extent, some individual investors are making personal investment decisions based on these two lenses. One is ESG, environmental, social, and governance factors that are filtering into the investment decisions. And then two, there's also some particular lenses that people are using to evaluate potential investments. One of them is the gender lens. I'm going to invite my colleague Mariam to sort of define these for us and then maybe ask one or two questions to the MTN team to sort of guide us on how they are capturing that.
Thanks, Aeko. Very briefly, and you touched a bit on it. The acronym ESG stands for environmental, social, and governance. And from a risk perspective, in fact, we look at them as risks. And increasingly, you know, investors, especially institutional investors and debt funders, you know, have increased their focus on them. So basically, we see environmental risk being the risk that activities, you know, of institutions like MTN here today, through implementation of its infrastructural activities, expansion, etc., affect the environment itself. And, you know, they would have negative effects to the environment. So from MTN, you know, perhaps Teleco, generally speaking, poses a moderate, medium environmental risk, but, you know, things like mass in places, in communities where people actually live, there's been some research around the effects of those. So it is important, and research does show that institutions that implement controls to manage such risks, in fact, make for more sustainable investment. That's a little bit on environmental risk and perhaps how it would relate to MTN. On the social front, of course, we're interested in the markets within which MTN operates. It's not a company on its own, but the relationships between MTN and its employees, its customers, its suppliers, and other stakeholders within communities. How is that, and how does that affect the value of MTN as a company, and how does that speak to its sustainability? I know personally the market is likely aware of the MTN Foundation and the activities that it has done. What are the plans here, and how do you see that affecting MTN's continued sustainability? And maybe lastly on governance. Governance is a major one. We talk about corporate governance, and it's been, one of the downfalls for several corporate institutions, and has also been, we've seen corporate scandals, that had questions. So for governance, we assess the company's leadership, including the board, their qualifications and ability to steer the ship forward. We can speak to MTN's previous 23 years and the plans for that. But a little bit of a twist there, we look at internal controls, audit, external audit, especially the ability to verify what's happening internally in MTN. And I think, a lot of that was said in the prospectus. We're also interested in shareholder rights, as an institution, will they be protected, especially now that you're coming to the market? How does that look? But a twist story that I was going to talk about is the gender lens. There's been a lot of talk about this lately in the investment world. There's research, in fact, that shows that companies that adopt diversity, racial, ethnicity, and gender diversity outperform peers. In fact, that executive teams that have, a significant gender diversity report superior bottom line returns, profitability than their peers. So it would be interesting to hear from the team, about MTN's position on this, and plans for the next couple of years. Thanks.
Okay, I suggest with Andrew that I'll take the question on the gender and the environment, and then maybe Andrew can dive into the other points raised. So today, our senior executive team, we're 14 people. 4 of them are women. That's not enough, for sure. We should strive to get at least 5, 6, 7. Ultimately, that is what we all need to aspire to. At the MTN group level, the situation is a bit better. We're almost at gender balance at the group executive level. Of course, it's a process. It's not so you wake up one day and say, okay, let me fire 3 guys, boom, out, and now I replace them with 3 women. It's a process, okay? But it's definitely very high on our agenda, not just at MTN Uganda, but at the MTN group level. It is one of my KPIs, important KPIs, that we deliver on that, not just the senior executive only, but also, the level below and below. We are, it's a layman's, it's not a good excuse, but it's unfortunately true. In our telco industry, the more you go technical jobs, sometimes that gender balance becomes a bit of a challenge. Not as many girls go for these science kind of things, but we try hard to balance there. We have some very, very, very good young female engineers that are challenging their colleagues. So it is on our agenda. It's something that we take very seriously, not just within the staff and the management, but also the board. Okay, so we have 5 board members. 2 of them are ladies. Probably, there's also room now to further improve on that. But it is something that we take seriously, because, as you say, the more you interact with investors, professional investors in particular, the more the ESG is high on the agenda. So it is something that you absolutely, as a listed company, have to take very seriously, because there are certain investors that might not even be interested in buying your share, and then the value or the perceived value or the attractiveness of your share for all the others also goes down. And so it is something that we are very conscious about, and we are going to further deliver on that. Just a small point on the environment. I mentioned also something already on the group on the chat. I answered in writing, and so we are, of course, big culprits in terms of carbon. Okay, we're running, generators. Of course, not directly. We don't own the sites anymore. The generators are not ours, but they are running on our behalf. So it's not something that we can run away from and say, oh, no, it's not our problem. It's ATC, it's the TowerCo problem. No. I mean, they are running those generators because we are renting their towers, and the electricity generated goes to the telecom industry or the telecom users. So we have embarked quite a number of years ago, but it's still very big, solar panels, hybrid solutions, battery solutions, site sharing. Just the fact, that us and Airtel go together on a site, okay, is already a saving by default. We use the same generator. We use the same tower. So just by infrastructure sharing, you also, as a country, as a whole, you reduce your carbon footprint. So those things are very high on our agenda. We are listed with the group in Johannesburg Stock Exchange. Those topics of ESG are high on the priority list, and that will not change. On the contrary, I think it will even get more emphasis and more priority now that we are listing for MTN Uganda. Andrew, you want to comment on a few other points?
Okay, so well, we must cover pretty much most, but you see, being part of MTN Group and our ambition 2025, ESG is core. Where we hope, where the plan is to be in the top quartile in the ESG ratings. And as we mentioned, and as you've mentioned, is especially when you have foreign investors who are investing like within MTN Group, depending on your ESG rating, some companies don't even invest at all. They just say it's a no-no. So as we speak today, we already have, I would say, KPIs from group for certain, that we need to meet to ensure that we achieve the end game from an ESG rating, even for Uganda. So we must already touched a lot on, the emission. That's where we are strong. So obviously we work with our partners, ATC and Ubuntu, to ensure we do that. I mean, like, you're working in an environment that has to be sustainable. So it means we are rolling out, especially, and also sustainable is one thing, but also access. When we talk about access to, to reduce the digital divide, which is part of the ESG, where we're rolling out, you would say, massive rural sites. And some of these rural sites are cost effective. They can use solar. So you gain on coverage, then you also gain on, you're not affecting the environment with emissions. That continues. And, there's a governance issue, of course, we spoke about. In our prospectus, it's quite clear that, we'll, of course, align, to the regulations. But, this is also a work in progress. So all I can say in summary, I think we must cover most is it's top on our agenda. I myself, women management, it's on our KPI. And it's not just ticking a box or PowerPoint, that actually you have a dedicated resource and, in your operation, who's managing this, chasing this, and every month you're reporting on the success to see where are you today, where should you be. So that is being followed religiously at MTN.
Andrew, I just want to add something just to close, like on the carbon footprint. Sometimes the solutions are so easy that you forget, we did a survey and we realized that almost 500 of our towers were within less than 1 kilometer from the grid, Umeme, okay? But we were not connected. For whatever historical reasons, maybe, the grid came after us and we forgot, or ATC forgot, or they didn't. So we embarked on a plan, ATC, the TowerCo company, MTN, and Umeme, together the three of us, on a plan to now share the investment that is required to connect our sites, those 500 sites that are really within relatively short distance to the grid. Now, where is the electricity from the grid coming from in Uganda? It's hydro. It's the best clean energy that you can think of. So by just switching off the generator and be able to connect to the grid, we again made massive carbon footprint savings just by, connecting the grid. And at the same time, the people living along the sides and seeing the line passing, Umeme was also now possible to connect more people onto the network, and also getting a cleaner hydropower electricity than the charcoal or whatever else we're using. So those are all of the kind of things that are very high on our agenda. And on top of that, we made savings. So ESG doesn't have to go against the bottom line. ESG can actually also improve your bottom line. So you win twice. It's not an either or. That's the beauty about it.
Yeah, so thank you, Will. So the last two questions are going to relate to governance again. I'm just going to follow up on, and first of all, commend MTN. My first telephone, I have to admit, was a phone I got in 2001. And back then, I think I was one of the last people who paid 18,000 shillings a month to be connected with connection fee. And I've maintained that number, and of course, things have evolved. But what I remember clearly is there has been, and I just checked again in your prospectus, you have had the same chairman since for the last 20 years or so. And so done wonderfully over the last 23 years, whatever. So probably best person to have handled those 23 years. But we investing in your future, right? An equity investment is really investing in the potential for the future cash flows. Is that still the same team? And is it actually okay for a publicly listed company to have nearly the same sort of chairman for the last 23 years? Of course, I don't know that there's any guidance anywhere. I'm not sure what the discussions have been with the regulator in terms of board renewal, etc. But that is one thing. The second thing, of course, which is again related to governance, is you are now for the first time going to have more than 2 shareholders. Of course, even now you existed with 1 shareholder, one was a minority. Now you're going to have super minority shareholders, so to speak, individuals that are not going to be the chairman or even step into the property of the company whatsoever. What protections could they potentially have or look forward to, and what safeguards? Because this is again a concern of the wananchi as they're making this investment decision. A lot of them, for many people, this might be the first time they are buying a share of a company that is listed on the stock exchange. And of course, they have concerns that people that have done this for a long time might not necessarily have. But how would you address that? Thank you.
Okay, thanks. I will take the first question on the board, and then Andrew will take the second question on the protection of the minority, or you call them super minority shareholders now. So yes, the board. I think in the prospectus we have been very clear. The CMA requires us to make modifications to the existing board. The board as it is today is not compliant to the CMA rules. There are not enough independent directors, okay? The chairperson also has to be independent. So those rules are very clear. We have asked and we have been given at least 6 months to comply, which means that, the first AGM, most likely, we will present a new board that will be subjected now, to approval. So we know that we are not compliant today with the requirements from the CMA in terms of the board composition, especially its independence. And we have been given timelines to comply, and we will definitely going to comply with that because it's in the interest of everybody, and other shareholders would be very worried and justified worried if the board, as it is today, would not change. I fully understand and I appreciate, and we have committed that we will comply to those new rules within the next 6 months. Andrew?
Okay, thanks. So regarding shares, the shares to be issued will be ordinary shares. That means we don't have any preferential or any other shares. So all our potential shareholders will pretty much have the same rights. Right to a board meeting, right to access to information. And today in the digital world, all this is easily accessible on our, internet pages, Twitter and all that. But the only difference will be like if, the number of shares, if we are paying dividend, obviously, those with more shares, that's where the variable will be. But in form of who is able to attend, what rights do you have, are you entitled to attend AGMs? Yes, they all are. And, now with the digital world, not everyone has to be there physically, but they can attend remotely and still, put up their questions or have any matter of concern addressed, even if they're not able to attend in person. So it's the same level ground, I would say, with the same rights. The difference will just be in dividends because of our numbers.
Yeah, Andrew, thank you. Of course, the thing is, even if you don't have necessarily preferential shareholders with interesting rights, for publicly listed companies, most usually have ordinary shares. Those are the ones that are listed. Of course, there's some people that have interesting share structures, which is not necessarily the case here. But even then, of course, the majority shareholder has the majority common shares, and they might make decisions that might not necessarily be in the best interest of the minority one. So a thing like, I think, again, I will ask this because this is some of, so the way we've arranged this is just to increase an understanding of general concepts, but also for this specific case for MTN, is there is, of course, information flying right, left, and center about MTN has a certain number of authorized shares, and then they only have a certain number of unissued shares. So who owns what number of shares and what bearing does it have on valuation? Of course, people in this call might understand whether there's a bearing or not, but I think it might make sense to sort of speak to that on record, so to speak. Andrew.
Okay, so the authorized issued share cap is 28 billion. What is issued and paid up is the 22. And it's out of the 22 that you get the 20% to get the 4.4477, which is normal for any company. You always have the authorized and what has been issued and paid up. Yes, you have a fair point. I'll have to accept that, if you have a majority shareholder, if I'm to use the words you're trying to say, my bulldozer race. But remember, you all have common interest. At the end of the day, and that's why sometimes they encourage employees or management to also get shares, because you all have the same objective. At the end of the day is to add value to the company and return maximum returns, not only to, to your head office, but to your operation. So yes, I don't see a scenario where you have serious conflict where the majority shareholder is trying to go in a direction that will destroy value. That is what is key. And then remember, this is a company is not only listed here, but also listed on the Johannesburg Stock Exchange. There are certain rules and governance. So if there are any key decisions, if it's a merger, it's an acquisition or something, of course it will come to, for AGM or the board. But, the driver will be on, we are here, how do we get there? So if there is a conflict, it's like, it's better to go this way or it's shorter here or there. but you wouldn't have conflict that this is where we have to go. So they issued all the shares that will include the bonuses to be applied for, like the 10 and 5 is included in the 4.5 billion shares. So, and that's where the valuation is also pegged on. The other is still unissued, the balance.
All right, I think that clears up a major issue that had been raised in some of these forums. So right now, I just want to cross-check with the rest of the team if they have any other specific questions that they want to put to the MTN team. Otherwise, we'll cross over to the Q&A. And then beyond the Q&A, we also want to just cross-check with the MTN team. Are there things that you might want to address that we haven't asked, but they're important for the public interest, especially with respect to either understanding the concepts, the IPO concept in general, but also specifically to the MTN IPO. But just going to cross-check with the team. Mariam, George, any questions that have come through the Q&A and or the chat that haven't been handled?
Yes, Aeko, there are 5 questions, I think, through the Q&A and the chat, and I believe Wim has responded to all of them. So we are clear.
Well, Wim has been busy.
Yeah, that's right.
Yeah.
Thanks, Wim.
Okay. Yeah. Okay.
Sorry, there's
excellent.
just one question.
Okay.
So someone was asking, for those that are going to use the MIPO, the mobile money to subscribe shares for this particular IPO, will they be able to do so subsequently when the shares start trading on the stock exchange, or this was particularly structured just to the MTN initial public offer without any secondary trading involved?
Wim.
Okay. There's one thing that I wanted to, further clarify, if you want, some of the things that I said in the beginning about localization, okay, and how we want to achieve that localization and why it is so important for everybody that localization happens. So the MIPO, what we've put together, a collaboration between MTN and the USE, allows every MTN mobile money customer with proper KYC, SIM registration, national ID, fingerprint, all of that is done. You're riding on that same KYC allows us, to open your account on the SCD account with the USE. So by using your phone, you have access to participate in the capital markets. No more paperwork, birth certificate, I don't know, have to go to town to an office, what, from the convenience of your bedroom or wherever you are, using your phone, you can open an SCD account. So we have democratized the access to the capital markets, okay, by just using your phone. Can't be easier than that. So the access barrier has been taken away. There is no more access barrier. You have a national ID, you have an MTN mobile money line, you can open an SCD account, okay? We've made it easy for people to participate. That's one. We've also made it affordable. Affordable is not about whether the 200 shilling is a bargain or a premium or no, I'm not talking about that kind of affordability. I'm talking about the minimum ticket that you need to put to participate is 100,000 shilling. That is affordable. There are thousands, 100,000s of potential investors that can join the investment because the entry ticket is 100,000 shilling. I always compare it with a plot of land. People say, we prefer to buy a plot of land. Okay, it's an investment like another investment. But can you buy a plot of land for 100,000 shilling? What kind of plot are you going to get for 100,000 shilling? A few square centimeters. So it is affordable for people to participate. It is accessible because it's easy via the phone. And on top of that, because we really wanted to localize, we have made it attractive. We are giving 10% bonus shares for every Ugandan participating using the phone. Those 10% are not there for the East African. They have 5%. You don't use your phone, you also have 5%. You're a foreigner, you have 0%. On top of that, the allocation policy, and this really touches the heart of the spirit of the license obligation of localization, the allocation policy. The allocation policy is Uganda first. Okay, Ugandans who apply for shares will be allocated their shares first and foremost, before anybody else. That's the spirit of the localization. In case of an oversubscription, every Ugandan will be guaranteed their shares. First Uganda, second comes East Africa, third is the rest of the world. That was the spirit of localization through listing. We have embedded that in our allocation policy to stress that point. Accessible, we want thousands of people to participate. Affordable, for as little as 100,000, you can participate. Attractive, because we're giving bonus shares. And then in terms of the allocation, it is Uganda first. Now, you will say, Wim is talking, commercial talk. He's saying what this lady behind here is saying on the TV, which is true. That's what I'm also saying. But for the bigger investors, and even the professional and the institutional and the foreign investors, if there are shares, it is important to see liquidity. The biggest challenge the USE has had over the last, 20 years in existence is liquidity. Most of the stocks are not being traded. There's no trade. Nobody wants to sell. Even if you want to buy, nobody wants to sell. So there's no trading. Okay, that's the big challenge of the USC, is a lack of trading. Apart from Stanbic and maybe a few others, a lot of the shares, there's no trading for days or weeks. So with these thousands and thousands of new investors, shareholders, we believe that the trading volume on the USC on our stock is going to change dramatically compared to what the other stocks are having. Most other stocks, the biggest stocks, I think, is Stanbic with 12,000 unique shareholders. If we can get 50,000 or 100,000 Ugandans owning share and willing to trade, it's going to change the dynamics of the platform. And that's why, a very good question, there is a trading module. Okay. Now, module 1 is open your SCD account. Module 2 is apply and pay for shares. As and when we list in December, we are going to activate module 3, which will allow you to sell your shares on the secondary market or buy more shares. And then later on in Q1 2022, when we have everything fully integrated with the USE, that same module will also allow you to buy and sell other stocks. At the beginning, it will just be the MTN share, but then later on in a few months' time, when we have ticked all the boxes with the USE, we will open up that platform for all the shares on the USE. And that's what we really need. We need trading. Stocks only can appreciate in value if there is offer and demand. If the stock is just stuck and nobody wants to sell, the price can never go up, can never go down. And that's what, investors also don't want. They want a true reflection of the share price. And for that, of the value of the company, and for that, you need trading.
That's an excellent point there, because for the longest time, like you pointed out, the problem at the USE has been liquidity, and simply because, not that there's no people holding those shares, but the concentration of the ownership is still very, very narrow. So is there a target number that you're working with in terms of localization? Is there a target number of local investors that you're working towards? And do you have any sense of how you're doing on that KPI?
Okay, so just to give context, today USC has about 30,000 SCD accounts, okay, of which 10,000 are East African foreigners. So there are about 20,000 Ugandans who have an SCD account today, after 20 years. The biggest shareholder base, as I said, is Stanbic with 12,000 unique Ugandan shareholders, okay? We want to do something that is 5 or 10 times bigger. You know, 5 is the minimum, meaning 50,000. If I can get to 100,000, we would be so happy. So at least, you know, change the game, the dimension. If you can go from, you know, 2 shareholders to do it to 50, or, you know, if we really think big, 100,000, that would be a revolution, and it would change forever the dynamics of the USC. And that's, you know, one of the, you know, strategic intent objectives that we have together with the USC, to use the MTN IPO and to have made it so easy for people to participate and access and blah, blah, is to change the dynamics of the stock market forever. That really is, you know, what we aspire to. But let's see how far we can get. Let's see.
So you don't have a sense of how you are doing? How many of those 100,000 have come through?
We already have more than 30,000 new SCD accounts that were opened using the phone over the last 3 weeks. So usually, you know, towards the end of the period, which is 22nd November, there is a certain acceleration. So let's see. But so far, we are already at 30,000. So, but I rather be under promise and over deliver. Huh? So let's see where we end. But that's the idea. It has to change the dynamics of the USC. This MIPO, that's really what we are aspiring to.
No, I mean, that is quite revolutionary in these parts. I think it might be the first one in East Africa. So the other thing, of course, as we have seen, especially for East Africa, there have been very few East African IPOs for a very long time. And some of them, when they listed, they had that initial pop, you know, the typical IPO pop where the share price rises significantly over time. I mean, within a very short time, and then sort of finds its level. So it is possible that there might be a pop, but it's also possible it might be flat. So what sort of words would you want to give your potential shareholders in terms of expectations, not in any way to predict what it is going to be, but regardless of what it is, what sort of words would you want to actually leave them?
Yeah, so you're asking the one question which you know very well that I cannot answer. I know you've put a lot of disclaimers and all that, but you know, speculating about the share price, it's really something that I cannot do. The only thing I can say is that I believe in the company. Andrew believes in the company. We are buying shares every day. 5 million via the phone. I'm buying, he's buying. We believe as management very strongly in our company. We believe in our story of growth. We believe, you know, in the future dividends. We are putting our own skin in the game, as they say. How that will translate into the share price, I don't know, and I don't want to make any comment about that. But we believe in our company, and the future. You know, it's the future. Buying a share today is buying into the future of the company. I see calculations being made, you know, as if the dividend would stay the same forever, and then it's going to take, what was it, 26 years to get your money back. Yeah, no, we're doing an IPO in a growth company. If you don't believe in the growth of MTN, yeah, then, you know, don't invest. We are selling you a story of growth. Okay, that's the bottom line. If you're convinced that MTN is a dead business that is not going to grow at all anymore in the next 5 or 10 years, yeah, then maybe there are other investments that could be more exciting than buying MTN shares. I agree. But if you believe in the story of growth, and if you believe that the company is well managed, if you believe, you know, that the governance and the ESG and all those standards, the CMA will protect you, the USC will have your interest at heart. If you believe the story, then I would say, you know, it's a great opportunity to participate. Andrew, you're the CFO. Maybe you can give more flavor on figures.
I think what I can add is, you know, is the services we're offering today is almost a right. You know, everyone deserves that benefit of access to internet. And it's not going to stop, it's just going to accelerate. And that's why I said in the beginning, when you believe you don't need voice, Momo, or data, then you need to worry. Or if you believe that, you know, in a few years, it's going to decline, I don't think so, because the world has shifted. So that's where, you know, like Wim says, you're investing in the future. You know where we are today. You look at the potential. So, you know, when you look at it, there's so much ahead, you know, that anyone will be able to benefit. You know, as you know, we can't speak about the price. This is for brokers, you know, for the 200 and where it will go. We cannot. All we can do is tell you our equity story on what the main drivers are. And we are telling you what you use every day. You all know what you do the first time you wake up in the morning. And if you don't believe me, avoid it for at least the first few hours and don't open, you know, don't look at your phone for at least 2-3 hours, you know. So that's what we are selling. And for now, we are investing to ensure is how do we scale that up in form of quality, availability? How do we prepare for the future? You know, and that's the exciting, I would say, journey ahead.
Yeah, so I should have said this initially, the declaration of conflict of interest. I should have asked Wim, are you an MTN shareholder now, or have you applied to become an MTN shareholder? That's same as you. I should have done that. And
I'm applying. You know, there is a special program, also incentive for staff. It's also disclosed in the prospectus. There's no secret about it. We are also encouraging within certain restrictions, of course, but we're creating an opportunity for staff to participate. So there is a 10% cash back that the company is paying back to all its staff who participates buying shares. So we are fully in it. Myself, Andrew, the whole Expo team. Yes, we are applying and paying for shares.
Yeah, I apply every day for the maximum. The 10% bonus through mobile money, you know, 5 million.
Oh yeah. And I should have said, I should have said that
effort.
Yeah, I should have said that I've done that as well, just for the benefit of, you know, you have to declare your conflicts of interest. And it's a very novel application of the mobile money platform. The other thing is that I should have actually also said that I should have made introductions of everyone, but I should have said, and unfortunately I'm saying it now though at the end, is that I'm an investment manager who is managing money for people who are buying, managing money, and we are going to might allocate a certain fraction to MTN. So just everyone is clear. And then I should have also said, many things I should have said, that we have built something on the MTN platform that helps people to save, plan, and invest on the MTN platform. So it's been a wonderful conversation, Wim, Andrew. There's many questions that have been answered. Hopefully, you're answering these questions as you're going through the doing the roadshow across the country. I want to just give you, as we close, one or two opportunities to this, if any at all. Is there any misconception right now that you've repeatedly come across and you'd like to dispel within the next 2 or 3 minutes as we close? Andrew?
I think just one is debt. You know, a lot of writing about debt, you know, that MTN Uganda has too much debt, it's overgeared. So if you look at our debt as of end of last year, where we have about 635 billion, that includes finance leases. So one needs to look at what I would call old school debt. That is the actual debt you get from the banks, which is only 388 billion. So you have 635 billion that is included, where one would assume it's 635 that you got from the banks. Now, the finance lease is, you know, these are the tower company. It's like, you know, under IFRS 16, you need to account fully for your contract in 10 years in the future today at a discounted level, okay? And we only pay 3 months in advance. So it's not like what you'd call real debt. And so you would say our MTN is overgeared. And when you look at our ratios, you know, like our net debt to EBITDA, which is, you know, way below 2.5, and our debt service coverage ratio, ability to pay the debt, where it should be above 1.5 and we're 4.5, we actually have room to even borrow more if there was an opportunity or, you know, a hot investment. So that's what I wanted to just, you know, everyone is forgetting that it's from 2019 when we adopted IFRS 16, finance leases are taking part of our net debt, and there's a lot of talk about that in the media. That's the only one I think I just wanted to clarify. And maybe lastly, I mean, this is a chance from coming from being a customer to a shareholder, you know, so you can be our bosses. So please take the opportunity.
Yeah, excellent. Wim?
The two things that I would wanted to add, two things that have come in social media and that we want to take the opportunity, as you have given us the opportunity to clarify. Mobile money is 100% part of the listed company. All the economic benefits of mobile money are flowing back to the owner of the mobile money business, which is MTN Uganda Limited, which is the listed company. So everybody who has their share in MTN Uganda Limited has their share of all the benefits that come out of the mobile money activity. Let there be no confusion about that. And secondly, I can also confidently say we are a public limited liability company incorporated according to all the rules and regulation of the country. There is also no risk on that. I know there is some legal challenge around it just recently, but I can confidently say we are a public limited liability company, and we are in our rights to, you know, issue an IPO supervised and approved by the CMA. And as Andrew says, it's an opportunity for all our customers, or even non. You don't have to be a customer, you can be on the other network, why not? You can still become our shareholder, you can still become our bosses. Really looking forward to that, you know, that figure, that 50,000, or who knows, maybe the 100,000. It would be, for us as MTN Uganda, it would be a major, major achievement. It would make us really feel proud that we have been able to achieve that. And you know, it's not the first time that we're the first in doing certain things. 3G, 4G, mobile money. We have been the first on many things over the last 23 years. We would really want to be the first to say, you know, we have 100,000 Ugandan shareholders. That would be, you know, a major, major, major milestone achievement for us. And we're working hard. I'm in Moroto, by the way, in the hotel here in Africana Hotel Moroto. I think, Andrew, you are where? In Rukunjiri, or you're already back in Mbarara?
I'm now back in Mbarara as Rukunjiri this morning. So just
okay,
back just before the call.
Okay.
So.
Okay, wonderful. So you see, we are using our phone hotspot. We've been tethering on my phone from Moroto. Yes, the network still needs to improve on a lot of places. I agree. We are investing and we're going to build 1,000 more sites. but at least I've been able, for the last 1.5 hours from Morocco to do this wonderful engagement. I really want to thank you guys for organizing this. It's a great opportunity for us to tell our story, and then, download the prospectus, read the prospectus, 260 pages, please read it and make an informed decision. Everything is in there. We have disclosed as much as we can, and very happy to take further questions, further engagements. The more you are informed, the better decision you can take on investing or not in the MTN IPO. Thank you so much.
Yeah. All right. Thank you so much, everyone, for turning up. And thank you for the audience for sparing the hours. It's been a very wonderful 2 hours. We will leave it here. Again, I think the only thing I'm going to leave here with is this is a country of 45 million people, give or take, wherever, however you do your math. It is probably growing at about 1, 2, 3% per year. It also has a population that will need to call somebody. You will need to access the internet. You will need to send mobile money. I'm just repeating what Wim already said. And so it's also a decision that an individual living here would want to make about owning a piece. Again, what I typically tell our clients is it doesn't have to be like bet the farm on it. It can be just a small, you have 10 million shillings, put 100,000 and see how that goes. It might change your life. It might not change your life at all, but it's one of the things that we typically recommend. So thank you, Wim. Thank you, Andrew. Thank you, Mariam. Thank you, George. It's been a wonderful conversation, and thank you to the audience. See you next time. Enjoy your evenings. Bye.
Thank you.
Thank you.
Bye.
Bye-bye.
Yes, bye. Thank you.